Are we on the brink of a foreclosure crisis? In today's episodes, we delve into the alarming spike in unemployment and looming housing market collapse. Nick Gurley predicts a recession underscored by rising unemployment, while Eric Nelson exposes shocking discrepancies in foreclosure data. Could this spell disaster for stock and housing markets? Don't miss these crucial insights. Like, subscribe, and stay informed. Today, on Real Estate in Review, we will summarize the following videos. From Reventure Consulting, we have major spike in unemployment. Fed will be forced to cut rates imminently. From Real Estate Mindset, we have 4.3 million homes at risk of foreclosure. Hey there, Reventure Consulting fans. Today's episode dives into the spiking unemployment rate in the U.S. and what this could mean for our economy and markets. Your host, none other than Nick Gurley, takes us through this economic roller coaster. Nick's knack for breaking down data with a sprinkle of real-world experiences makes this episode a must-watch. Nick argues that the rising unemployment rate indicates we're on an inevitable path towards a recession. The spike from 3.4% to 4.1% unemployment is eerily reminiscent of patterns seen before past major economic downturns, such as the 2008 financial crisis and the dot-com bubble. According to Nick, the 14% year-over-year increase in the number of unemployed people is a key recession signal that shouldn't be ignored. Here are the key points discussed by Nick Gurley. Spiking unemployment rate. The unemployment rate has jumped from 3.4% in early 2023 to 4.1% today. Nick compares this spike to trends before previous recessions, citing the late 2007 signs leading to the 2008 crash. Economic indicators. A 14% year-over-year increase in the number of unemployed people. Historically, crossing this 14% growth threshold has always preceded a major recession. Real-world observations. Nick shares personal anecdotes from his travels across the U.S., revealing widespread economic struggles. Reports of rising unemployment from places like Florida and California. Market disconnect. A disconnect between high stock market valuations and a worsening real economy. Record low buyer demand in the housing market, with mortgage applications down 50% from the pandemic peak. Nick Gurley made the following predictions. Recession incoming. Nick predicts a recession marked by increased unemployment and economic slowdown, events historically triggered by the current unemployment trend. If the unemployment rate continues to rise, we're likely to see both the housing and stock markets crash. Fed rate cuts. Nick expects the Federal Reserve to cut interest rates before the year ends, driven by the economic downturn and rising unemployment. However, he cautions that rate cuts alone may not stave off the inevitable recession. Nick's analysis points towards an unavoidable economic downturn driven by rising unemployment and an unsettled labor market. While the Fed may cut rates in response, historical data suggests that such measures often come too late to prevent a recession. If you're keen to keep up with these economic developments and their impact on the housing market, consider subscribing and tuning in to Reventure Consulting for more insights. Welcome back to Real Estate Mindset. Today, host Eric Nelson delves into a topic that's got the housing market shaking in its boots: the alarming number of homes at risk of foreclosure. Doubling down on the chaos, we're comparing data from HUD and Black Knight, revealing shocking discrepancies. Buckle up because it's going to be a wild ride. The core thesis of the video revolves around the significant discrepancies in foreclosure data between HUD, Housing and Urban Development, and Black Knight, a leading provider of data and analytics. Eric Nelson suggests that Black Knight's data is potentially misleading the public into underestimating the looming foreclosure crisis in the United States. Here are the key points discussed by Eric Nelson. Data discrepancies. HUD reports 4.3 million households behind on mortgage payments, while Black Knight reports only 1.8 million. Eric argues that the actual data from HUD showcases a much grimmer reality, indicating serious data manipulation by Black Knight. Housing market stress indicators. HUD's June 2024 report shows a higher percentage of households in distress compared to Black Knight's data. 5.3% of households are behind on their mortgage according to HUD, while Black Knight reports a much lower 3.04%. Renters' predicament. 11.1% of rental households are behind on payments, translating to approximately 5.1 million households. 4.3% of renters fear imminent eviction, equating to around 2 million households. Financial behaviors contributing to crisis. Reckless consumer spending, particularly on credit card debt, is increasing financial stress on households. Personal savings rates are at a decade low of 3.9%, down from about 7 to 8% pre-lockdowns. Eric Nelson made the following predictions: increased foreclosures. Given the stark differences in reported data, Eric predicts a significant increase in foreclosures as more accurate data surfaces. The combination of high consumer debt and low savings could trigger a wave of foreclosures. Economic slowdown. Eric warns that the unhealthy economic indicators, such as declining real median household income, suggest an impending recession. The trend of rising delinquencies and credit card debt is a recipe for financial disaster. Eric Nelson concludes by stressing the grave state of the housing market, highlighted by HUD's more comprehensive data. He urges viewers to dig deeper into the real data and not be swayed by manipulated reports. His call to action: stay informed, manage your financial health, and prepare for a challenging economic climate ahead. Oh, and don't miss out on his free home buying course filled with 20 years of experience to help you navigate these turbulent times. Nick Gurley warns of an impending recession driven by the rising unemployment rate, with parallels to the 2008 financial crisis. He predicts inevitable rate cuts by the Federal Reserve, though these may not prevent the downturn. Eric Nelson paints a grim picture of the housing market, citing discrepancies in foreclosure data and alarming levels of consumer debt. Both experts agree on the serious financial challenges ahead, but have different takes on the timing and severity of the economic fallout. Stay tuned for more analyses and strategies to navigate these turbulent times. Thanks for watching Real Estate in Review for July 11th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.